Why do I like to do things in last minute? Oh my god, I don't have a time. Usually isn't enough for me. So I guess I have to offer the history book. Wait a minute. What what happened with my eyes? Where 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 am I? Here I am.
Oh, you are here already?
Huh?
We are in Hungary. Don't you say that you want to be here?
Hungry? But how?
Anyway, don't you want to take a look while we are here? There's a lot of interesting stuff here that maybe you want to buy later. Oh, by the way, I'm sure that you already know the ringgit is not applicable here.
You mentioned about the money. Would you mind explaining a little bit of money in Hungary?
Out of sudden,
Nah, I just want to know. Yeah, just curious about that.
as we know, money is anything that acts as a medium of exchange that generally acceptable as a payment for goods and services.
Oh my god, what it means?
Simply said, money is something that people generally accept as payment of goods and services. Oh, it is also used to pay off your debts.
What is Hungary currency?
Hungarian forint with FT sign. Generally, there are seven kinds of money in the money evolution. First of all, the commodity money, a wide variety of items or commodities that we use as money.
It is what we call as a barter.
No, it's similar to butter, but is distinguishable from it in having a single recognized unit of exchange. Next, we have metallic money, which is metals for sure that we use as money, such as iron, tin, copper, silver, and gold. While paper money is originated from receipt issued by the goldsmiths to customer for safekeeping of their valuables. In Hungary, between 1754 until 1918, which is until First World War, they applied geometric money and paper money as their currency. They are silver-based currency to gold standard, which is called as gulden, and krone is after gulden. From 1900 onwards, krone notes were the only legal banknotes of the empire. Then they introduced Hungarian krona, but it was replaced by the penge in 1925 due to a serious inflation. Both of them still in metal and paper money. However, Hungary slowly to apply the next evolutions of money in their currency.
What is inflation? What is that?
I will explain it later, but after I explain the remaining four kinds of money.
Okay, hold on. What is the fourth money?
Next, there is token money, which has a lower metric value than its face value. Then, fiat money was introduced that we still use nowadays. It is any item issued by the central bank and declared by the government as money. And there are bank money and plastic money. In the other name is new money.
Plastic? You're joking, right?
No. First of all, bank money, which is also known as bank deposit, demand deposit, and current account. While plastic money that you thought that I was joking earlier refers to credit cards such as MasterCard and Visa or debit cards which are cashless transactions. I guess you have plastic money.
Yes.
but with no balance.
Excuse me. He still has a balance, but only 50 cents.
Anyway, as I mentioned earlier, Hungarian currency is Hungarian forint, which is fiat money. Hungarian tenge survived for only 20 years and experienced the most serious hyperinflation ever recorded in Hungary. And it was replaced by the forint, which is nowadays Hungarian currency, on 31st July 1946. In Hungary, there is Florentines, also a gold-based currency, was used from 1325 under Charles Robert, and several other countries followed its example.
Oh, I got it. Wait, hold on. They are inflation. Hyperinflation happen in Hungary? You said that. You will explain to me, right? What are they?
Oh, my bad. Inflation is the uh miss, I think I have to use the washroom right now. Sorry, miss.
What?
Miss. Here's the money. You just continue to look around. I will catch up with you later, miss.
Okay.
Excuse me, miss. Are you okay? You look very confused right now.
I don't even know why and how I'm here just now. I just missed one weird guy.
Here you are. I've been looking for you everywhere.
Me?
Yes, you. How was Hungary so far?
I'm only here for less than 5 minutes. I think I need more information before I give my opinion about this place. So, can I ask you about something?
Sure. Don't hesitate to ask me anything, miss.
So, since the weird guy told me about the money, can you explain to me what actually demand for money is?
Sure. Demand for money is how much of our wealth we wish to hold as cash in hand or cash in bank at any moment of the time. The demand for money function creates a background review the effectiveness of monetary policies as an important issue in terms of overall microeconomic stability. By the way, did you ever heard about Keynesian theory?
In my first time hearing that, what is that?
For your information, Keynesian demand for money is a theory where there are three important motifs. The demand for money, which is transaction motive, precautionary motive, and speculative motive.
Do you mind explaining to me what are those motive meanings?
Sure, why not? As for transaction money, it is a medium of exchange of money, and money is used for conducting everyday transactions, such as paying for food and transport. It is convenient for people to hold certain average of money at any given time depending on the amount of the things they wish to purchase and the size of their income. Next, the precautionary motives. Money is held as a precaution against some unforeseen event, such as paying for the repair of car, an emergency, or medical bills. The level on income will determine the amount held for this precautionary motive. Last but not least, speculative motive. Some people hold money for a speculative purpose, meaning that they hold money to buy financial assets such as stocks and bonds for profitable opportunities.
Wow, I think I understand. There are so much to know about the demand for money since we're in Hungary. May I know a little bit about the demand for money history in Hungary?
Wow, I'm quite impressed that you actually curious about that, miss. After a collapse of Soviet Union in the beginning of 1990s and with the membership of the European Union, the Hungary economy went through some liberalization of the external trade, the elimination of price and interest rate change in the monetary policy, including innovations in the banking sector. It is conceivable that these developments have changed the relationship between money, economy, prices, and other basic economics variables, making money demand functions structurally unstable.
I totally understand this. Thank you very much. Then how about the supply of money?
I think it's better to refer Adli as his expert about that. Wait.
Money of supply, Hungary, IZZAH. I see. I understand. Okay, alright. Okay, listen. Supply of money is something that is controlled by the central bank and is perfectly inelastic to the change of interest rate. In other words, the money supply is all the currency and other liquid instrument in country economy on the date measure. The money supply broadly include both cash and deposit that can be used almost as easily as cash. Government issue paper currency and coin through some combination of their central bank and treasury. So every country has its own way to measure money supply, but in general, money are divided by three categories, which is M1, M2, and M3. M1, or you can call it narrow money. It is a transaction money or money which can be directly used for transaction. M1 is the narrowest definition of money supply, and it comprises the most liquid asset, which is either cash or money readily changed to cash. The most liquid asset consists of M1, coin, notes, and demand deposit at commercial banks that are easily convertible into cash. M1 is the most liquid asset since it can be used as payment and settlement of debt directly without any conversion. So, money supply M1 in Hungary average is 7,355.11 billion from 1992 until 2021, reaching an all-time high of 30,189.60 billion in March of 2021 and a record low of 587 billion in March of 1992. Next is M2. M2 is a broader and less liquid definition of the money supply. It can be quickly converted into medium of exchange, but the liquidity is lesser than M1 because it needs to turn into cash first. M2 consists of M1 and near money, or you can call it quasi money, a highly liquid financial asset, such as saving deposit, fixed deposit, NID, and NCD. So, in history of Hungary country, money supply consists of M2, 11,161.14 billion from 1991 until 2021, reaching an all-time high of 33,939.90 billion in March 2021 and a record low of 885.10 billion in January of 1990. Let's go to the M3. M3 or broad money is the broadest definition of the supply of money with the lowest liquidity. M3 usually is used by economists to estimate the entire supply of money within an economy. M3 consists of M2 plus saving, fixed deposit, negotiable certificate of deposit, and repurchase agreement in other financial institutions, merchant bank, and discount house. In this case, for the Hungary country, money supply M3 is Hungary average is 11,851.03 billion from 1991 until 2021, reaching an all-time high of 34,012.86 half billion in March of 2021 and a record low of 994.40 half billion in January of 1991. That's all I know about of supply in Hungary country. Got it? Good. Now I got to go because I have a job to do. So see you next time. Call me if you need more information about the Hungary money, supply of money. Okay? Alright. Bye. Then I forgot to mention about inflation to her. The inflation in this case is include the CPI, also known as the cost of living index. It is irrelevant with the inflation because of the demand for money is increased cost of the CPI increase. Then the supply money is also increased that will make the currency will be decreased. The gap between demand curve and supply curve is what we call inflation gap. That's how the inflation occurs.
Psst, psst, psst. Izzah, Izzah. Izzah, here.
Hey, Uzma, what are you doing here?
Come here. I will share with you some information about central bank and monetary policy in Hungary. I'm sure it will be a useful knowledge for you someday. Would you like to hear some?
Yes, sure. Why not?
Okay, Izzah. First of all, I will tell you about financial system in Hungary. The Hungarian banking sector consists of 41 institutions, which is 10 by 21 commercial banks, 8 foreign bank branches, 5 mortgage banks, 4 building societies, and 3 specialized banks. Furthermore, the central bank has its principal aim. They are price stability, responsible for issuing the national currency, which is the forint, controlling the money in circulation, setting the central bank base rate, publishing official exchange rates, and managing the foreign exchange reserve and gold to influence exchange rates. Is that clear for you?
Oh, wow. That's very helpful.
So, Izzah, there are also some monetary policies which the central bank carries out for years. The most important is to ensure stable economic growth that is sustainable over the long term. The others are inflation targeting system, inflation report, and monetary policy instrument. The main goal of MNB in forming and operating its monetary policy instruments is that short-term money market rates adjust to its key policy rate and to expectations, and the operational framework promotes the efficient implementation of interest rate policy. Do you understand, Izzah?
Thank you, Uzma, for the explanation. I think your information could be help me someday. So I need to go now. See you later. Bye bye.
No problem, Izzah. Bye!
Hey, hey, you over there. Hey, me? Wait, hold on. Why you like me? Well, I'm your doppelganger. Nice to meet you. Well, nice to meet you too, I guess. Since you have met the four of them before this, so you're gonna meet me today. So I will explain to you about the commercial bank. As you can see, there's a lot of banks at Hungary. So the commercial bank is defined as a financial institution. There are many functions of commercial bank, which is accepting the deposit, providing loans and advance, providing other banking service and facility. Lastly, the credit creation. You can see here we are at OTP Bank, formerly National Savings Bank, and it was established at 1949. The bank offers commercial banking service in Hungary, Bulgaria, Russia, Ukraine, Croatia, Romania, Slovakia, Serbia, and Montenegro. It provides currency exchange, private banking, insurance, personal and mortgage loan, and internet service banking. Based out of the Budapest, the bank managed a network of 1,302 branches and employed around 27,000 staff. As of 2006, total assets of the bank were US dollar 44.66 billion and net profit was US dollar 800 million. The second one is KNH Bank. It was founded in 1987. The financial institution provided various banking products and services for retail, private and corporate clients in Hungary. It offers a full range of financing products, including account management, investment saving loans, bank guarantee, bank card service, custody management, treasury, project financing, private banking service, as well as investment fund management, leasing security trading, factoring, and life and pension of insurance. The headquarters in Budapest, the bank maintained a 4,000 strong workforce and oversees a network of 207 branches. As of 2006, the bank total asset amount of US dollar 11.31 billion and net profit reached US dollar 167.55 million. Credit creation process, the RBI produced money while the commercial bank increased the supply of money by creating credit, which is also treated as money creation. The commercial bank create credit in the form of secondary deposit. Total deposit of bank is of two types, which is first is primary deposit, which is initial cash deposit by the public, and the second one is the secondary deposit, which is deposit that arise due to loan given by the banks, which are assumed to be redeposit in the bank. As for money creation by the commercial bank is determined by two factors, namely by primary deposit like initial cash deposit and legal reserve ratio, and minimum ratio of deposit, which is legally compulsory for the commercial banks to keep as cash in liquid form. Broadly, when the bank receives the cash deposit from the public, it keeps a fraction of deposits deposits, cash reserve, and use the remaining amount for giving loans. In the process of lending money, banks are able to create credit through the secondary deposit many times more than initial deposit.
Hey, Jam, everyone is here. Where are you?
Hey guys!
Hi, Jam.
I'm so sorry for being late.
I hope you got something from our video about economy in Hungary.
Don't forget to
Like,
Comment, subscribe. My name is IZZAH HAYATI.
My name is NURUL BATRISYIA.
my name is AMIR.
and my name is FARHANA.
And my name is IZZAH.
Bye.